Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries behind the money. Today we're diving into a report from the Federal Home Loan Bank of Indianapolis that is all about new debt. Buckle up because we're about to decode what this means for the bank and maybe even for you. So, what is the big story here? It is all about Federal Home Loan Bank of Indianapolis taking on new financial obligations, essentially issuing new bonds. Think of it like the bank borrowing money that it will pay back later with interest. This is a pretty standard thing for banks to do, but the details are where things get interesting. This particular report is filed on the 10th of November, 2025. And it's about financial commitments the bank is making. The main event in this filing is really about the creation of new direct financial obligations. Basically, the Federal Home Loan Bank of Indianapolis is becoming the main party responsible for paying back some new bonds. These bonds are called consolidated obligations, which means they are the shared responsibility of all the Federal Home Loan banks, but this specific bank is on the hook for them. The important part here is that these are bonds with maturities of 1 year or more, meaning they are longer term debts. Now let's look at the nitty-gritty of these new debts. We have a table here that shows us details about these bonds. For instance, on the 10th of November 2025, they are issuing a bond with a CUSIC number 3130B8GN6. This one has a settlement date of the 17th of November 2025 and matures all the way out on the 17th of November 2032. That is a 7-year bond. The coupon percentage or the interest rate is 4.600% and the face value or the par amount is a whopping $70 million. Then we have another one, CUSIP 3138库, also dated November 10th, 2025. This bond settles on November 20th, 2025 and matures on November 20th, 2028. This is a shorter 3-year bond with a coupon of 10% and a par value of 25 Allied dollars. And look at this one, CUSIP 3130B8L91. This is the biggest one in this snapshot, issued on the 10th of November 2025, settling on the 12th of November 2025 and maturing on the 4th of December 2026. This is a bit over a year-long bond, with a coupon of 3.810% and a massive par value of $250 million. These are significant amounts of money being borrowed. What is also interesting is the call type for some of these bonds. We see optional principal redemption. This means the Federal Home Loan Bank has the option to pay back some or all of the principal early if they choose to. This gives them flexibility. For example, bonds with an American call style can be redeemed anytime from a certain date until they mature. The rate type for most of these bonds is fixed constant. This means the interest rate stays the same throughout the life of the bond. This predictability is often preferred by both the issuer and investors when interest rates are stable or expected to fall. So, what does all this mean for the Federal Home Loan Bank of Indianapolis? They are essentially raising a lot of capital through these bond issuances. These consolidated obligations are the joint and several obligations of the Federal Home Loan Banks. It is important to know that these are not guaranteed by the United States government, which is a crucial detail for investors to consider. The bank is using these funds likely to support its lending activities and meet the financial needs of its member institutions. The filing also includes a disclaimer that they don't share every single detail about these bonds. This is pretty standard, but it means that if you wanted to know absolutely everything, you'd need to look at the actual bond documents. Also, the par amounts you see here, which are the face values, might not be the same as what is reported in their financial statements prepared according to generally accepted accounting principles. That is because those statements account for things like discounts or premiums on the bonds, which aren't reflected in these par values. And finally, the report is signed off by Lana D. Buchman, Senior Financial Reporting Principal, on the 13th of November 2025. This indicates the official filing of this information. Now, let's talk about what this all means. The Federal Home Loan Bank of Indianapolis is actively managing its funding. By issuing these bonds, especially with varying maturities, they are ensuring they have the cash to operate and lend to their members. The fact that they are issuing longer-term debt suggests they are confident in current interest rate environments or are strategically locking in rates for the future. The total amount being raised, over $400 million just from the examples we looked at, shows a significant operational scale. The optional principal redemption feature is a smart move, allowing them to potentially refinance or pay down debt at a lower cost if market conditions change favorably. However, the lack of government guarantee is a key risk factor. While these are stable entities, unexpected economic downturns could impact their ability to manage these obligations. The strategy here seems to be proactive capital raising to support their core mission of providing liquidity to housing finance institutions. Alright, that is our breakdown of this Federal Home Loan Bank of Indianapolis filing. What is your take on these new debt obligations and what they signal for the bank's financial health? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.